Hello traders, I want to start off by asking you a very obvious question. Why do so many traders, so many people in the market find it extremely difficult to take profits out of the market on a consistent basis? Now, of course, there's lots of reasons for that, but the number one reason I think that most traders really struggle to take consistent profits out of the market is they've fallen into the money trap. You've fallen into the money trap long before you even executed a trade. So what is the money trap? If you are struggling to go from a novice trader to a professional trader making consistent profits, then you have fallen into this money trap. Number one, you have to learn how to protect your trading account. Again, if you're struggling to go from novice to professional trader, then you don't have this aspect of your trading down pat. You need to learn how to play defensive. Professional traders are very good at playing defensive. And here's how you do it. You have the worst case scenario in mind. And I would encourage you to do this. Meaning, if you have the worst case scenario in mind, you know exactly how much money you have at risk, how much money you can lose on each and every single trade that you take. That way, as you execute your trades and you have a series of losing trades, or your trading is just not as consistent as you'd like it to be, then it really can't hurt you if you have a tolerable risk amount. And you need to be very, very consistent with your risk amount on every single trade you take. I'm convinced the only difference, one of the major differences rather, from a novice trader to professional trader is professional traders know how to allocate their risk at a level that it doesn't bother them. They're not rattled if something goes wrong, if they have a series of losing trades or they lose a trade. It doesn't bother them. So you need to learn how to protect your capital. And the best way to do that is be very, very consistent around your risk. Let me give you an example, guys. Let's just say it's a hot summer's day and you go out barefoot and you go and walk on the road, stand on the road. Your feet are probably going to burn. You're going to feel it. But if you did that day after day, it would become bearable. Or what about drug addicts? Guys who are addicted to drugs. They need more and more of that drug to give them the fix. They become used to it. It's the same thing with trading. You need to become used to risking a set amount of money on every single trade you take so you don't get rattled when a trade goes against you. You must play defensive. Absolutely 100%. If you can learn to play defensive and protect your capital. The capital is the only thing that keeps you surviving. You need to be in survival mode until those great trades come around. And of course, the results of those trades counteract your losing trades. But it all starts with you protecting your account. Don't worry about the money. Don't worry about the profit. You should get good at playing defensive. If you want to finally jump through that hurdle from novice to professional, learn to play defensive. Anyway, guys, very, very short video, but I hope you got something out of this. I could talk for hours on this topic, but learn to play defensive. Allocate your capital first off with an amount that you're happy to lose. And you should have somewhere between 20 or 30 trades up your sleeve. Now, that's going to mean you're going to risk less than you would probably like, because you want your account to grow fast. I understand that. Get good at your risk allocation in dollar terms, not in percentage terms, not in pips, in dollar terms, and maintain that risk amount consistently until you begin to see your account grow. You can always increase it, but I would suggest a sweet spot would be to have between 20 and 30 trades up your sleeve as you are learning your craft. If you can do that, I'm telling you guys, you are halfway there of becoming a professional trader. You'd be surprised the amount of traders that do not know how to protect their account. Yet it's the number one thing that you have to do. Learning how to trade, the mechanical aspects, the technical aspects of trading, that's a very simple thing to do. That's just a learned skill. But if you can't get this part of your trading down pat, I'm telling you, it's the fast road to the poorhouse. So let's recap. Allocate an amount of money that you are happy to lose, almost happy to lose, where it doesn't rattle you. Most traders risk too much money because they're focused on the profit, not playing defensive. And number two, maintain that amount. Keep that amount very consistent. Even if you have a loss or two and your account draws down, maintain risking that same allocated dollar amount on every single trade you take. Now we're getting into the risk to reward phenomena, and that's what professional traders know. They know how to risk their money professionally, and they apply risk to reward ratios to their trading. But it all starts with you protecting your asset. Your account, trading account, is your asset. No trading account, you're out of the game. Your number one job is to protect it. Now, I know you all know this. There's no new news here, but please spend more time focused on what you can lose rather than what you can risk. And once again, guys, I assure you, you're going to be halfway ahead of the curve than any other trader out there, because they don't focus on their risk, they focus on what they can make. Don't be that guy. Take the time, build your account up by managing your risk professionally, and then you can always increase your risk as your account grows. Hope you found this little video helpful, guys. Talk to you soon. Bye for now.